Welcome to today's market report. Stocks on Wall Street notched their fourth weekly gain in a row on Friday, with the S&P 500 and the Nasdaq both rising to new all-time highs as the economy continues to recover from the COVID-19 pandemic. The S&P 500 finished the session up 0.34% to end at 3,397, a new record closing high. The Nasdaq advanced 0.42% to end the day at 11,311, also a record close. The Dow Jones meanwhile gained 190 points or 0.69% and settled at 27,930. It remained about 5.5% below its all-time high in February. For the week, the tech-heavy Nasdaq surged 2.7%, its fourth straight weekly gain. The S&P 500 managed a 0.7% gain, also its fourth weekly gain in a row, while the Dow Jones ended the week roughly flat. Stocks have rallied sharply in recent months, with all three benchmarks up more than 50% from their lows set on 23rd of March when corona-related lockdowns shocked the stock market. The bulk of those gains has been driven by strong performances in the big tech stocks. Tesla notched yet another record on Friday ahead of an upcoming stock split, with shares of the Elon Musk-led Silicon Valley car maker nearing the $2,100 level for the first time in history. The stock has gained around 390% this year. Apple climbed more than 8% on the week, becoming the first publicly traded company in the US to reach a market valuation of $2 trillion. Its shares are up almost 70% in 2020. Amazon also rallied over 4% this week, bringing its year-to-date gains to about 78%. On the FX front, GBP/USD plummets to session lows around 131 mark amid notable USD demand. The GBP/USD pair dived to daily lows during the early North American session, with bears now eyeing a sustained break below the 131 round figure mark. Following an early uptick back closer to year-to-date tops, the pair witnessed a dramatic turnaround and has now eroded a major part of the previous day's positive move. Negative Brexit-related headlines triggered the initial leg of the intraday slide, which accelerated further in the wake of a strong pickup in the US dollar demand. The British pound met with some fresh supply after the EU's chief negotiator Michel Barnier said that the seventh round of Brexit talks failed to yield any breakthrough. Barnier's UK counterpart David Frost also mentioned about the deadlock, suggesting weeks of uncertainty ahead. This in turn took its toll on the sterling. On the other hand, a sharp turnaround in the global risk sentiment, as depicted by a steep decline in the equity markets, forced investors to take refuge in the safe haven greenback. A broad-based US dollar strength has seen as another factor that contributed to GBP/USD pair's sharp intraday slide of over 150 pips. It will now be interesting to see if the pair continues to attract some dip buying at lower levels or weakens further to retest weekly lows support near the 130.65 region. Some follow-through selling will confirm a near-term breakdown and turn the pair vulnerable to accelerate this slide further towards challenging the key 130 psychological mark. Market participants now look forward to the US economic docket, featuring the release of flashing manufacturing and services PMI print. The data, along with the broader market mood, will influence the US dollar price dynamics and produce some meaningful trading opportunities. The euro-dollar pair dropped further and bottomed at 117.53, the lowest level since 12th of August. The euro found support above 117.50 and rebounded modestly to 117.75 area, about to end the 8-week streak. A stronger dollar on Friday weighs on the pair. The greenback is the top performer on Friday. Dollar index was up 0.5%, trading above 93.50, the highest intraday level since Monday. This is today's market news. Thanks for listening. We'll see you next time.